All right, let's cross over now to Europe, where stocks were cautiously higher in the morning, shrugging off concerns over COVID-19 restriction measures on the continent. For more, here is Chiponda Chimbelu joining us from Berlin. Hi, Chiponda. Good afternoon. Good to have you on the show.
Good afternoon.
So, tighter restrictions in Germany and across Europe are worrying investors and businesses. How are the markets reacting today?
Well, in terms of restrictions, in terms of what we're seeing in the markets today, we're basically seeing that the markets are trading at pretty much fairly the same levels they were at on Friday. And on Friday, they dropped for the first time in 7 weeks. And of course, there's a lot of fears around the COVID pandemic here in Europe. We've seen countries, coming in with tougher restrictions. In Austria, there's a lockdown. In the Netherlands, in Belgium, and here in Germany, there's of course also tougher restrictions, to combat the high COVID infection rates that we're seeing in those countries. And here in Germany, for instance, in the German state of Saxony, what we've seen is that, they are trying to crack down on people who have not been vaccinated, and they cannot, for instance, go shopping. But that's something, of course, that's going to concern investors, because retail activity was fairly big contributor to the economic recovery in the third quarter of this year. And so that's something that is worrying investors, just how much will, the current lockdown affect retail activity. And of course, we already can speak of supply chain concerns, which we've had already. And so there's a lot of concern about whether the lockdowns that we are seeing right now will be affecting retail activity and just how much that might play into the economic recovery.
And Europe thought it has passed measures like nationwide lockdowns. Is what's happening in Europe enough to send economic recoveries into reverse?
Well, in terms of what we can see in terms of the lockdowns, the analysts, at least, are saying that the expectation is not that these lockdowns might be as severe in terms of economic impact as the last ones we've had. And that's because policymakers have been learning with each lockdown how to respond with measures that can help businesses and also help people. And that, of course, helps to prop up the economy as well. So the expectation is that even if we might see some sort of impact, it will not be as bad as we have seen earlier. But they're still warning that in terms of economic recovery, we might see the economy stagnating or perhaps even retracting. And today we have some new figures from the German central bank, the Bundesbank, and they have said that they expect GDP growth to stall in the fourth quarter. And of course, that might be potentially linked to the current lockdowns, and of course, the fact that we are not seeing economic activity being able to come back to the levels it was pre-pandemic, because of course we're still fighting with the spread of the coronavirus, and now of course with an extremely high level number of cases here in Europe, the highest we've seen in some parts of the continent, Germany and a couple of other countries.
Thank you very much, Chiponda. I guess we'll leave it at that. Hope to see you tomorrow, and enjoy the rest of the day. All right, we'll take a break now. When we come back, we'll look at Tanzania's economy. That and more in a moment.